Good afternoon, everybody, and a very warm welcome to FII 7. Whether you're tuning in from around the world or catching up, or whether you're here live in Riyadh, I'm Ollie Barrett. I'm a host for this next session about where the first trillion fintech will emerge and how it will emerge. So thank you for being here. As I take my seat, I'm joined by two excellent guests who are very well placed to help us because, let's face it, the boundaries of what we know of as financial services are shifting. There is so much disruption, and actually, those boundaries are being redefined as we speak and meet here in the kingdom. So the question is how this trillion fintech will emerge, and our two guests are very well placed to answer that. So it's a pleasure to welcome our first guest, Martin Gilbert. He is the chair of Revolut. Now, being based in London as I am, Revolut needs zero introduction, but just in case, let me tell you about Martin. Started out as an accountant, built and founded Aberdeen Asset Management in the 1980s, and built it through its growth for 34 excellent years. So a bit of a legend. He is a senior director at Glencore, and Revolut describes itself, Martin, as one app for all things money. From your everyday spending to your future with savings and investments, Revolut helps you get more from your money. Everyone, please welcome Martin Gilbert. Next, I am delighted to welcome to our FII stage Pierpaolo Barbieri, who is the founder and CEO of Ualá. Now, founded in 2017 in Argentina, Ualá also wants to be there whenever you need us, says Pierre on its site, starting with me. Well, we will start with you today. Fun fact about Pierre, if you don't know him already: he was a senior associate at the Applied History Center of the Kennedy Center's School of Government. Indeed, his first book, Hitler's Shadow Empire, the Nazis and the Spanish Civil War. Well, it will only be peace and love today, I can assure you. But today, Ualá says, we're a technology company that offers an ecosystem of financial solutions. Please welcome Pierpaolo Barbieri. Welcome, Pierre. So I suppose, guests, why don't we imagine our panel was only 2 minutes long, and I set you this exam question: how will the first trillion fintech emerge? Your pithiest answer, Martin.
I think it needs to be global. I don't think there's any country big enough, really, to maybe China, but they've already got a big neobank there. Yeah. So I think it needs to be a global bank.
And you're very much in that sense about deeds, not words. You already have a global footprint. Just remind us on the company where it currently stretches. HQ'd, of course, out of London.
London, obviously Europe, LATAM, a bit in America, Singapore, Australia, Japan, India. So yeah, trying to build a global footprint. So yeah, it needs to be global.
Got to be global. Okay, that is top of the to-do list. Right, Pierre, how do you answer that initial question?
Yeah, I would agree on the global point, and I would say that as we develop more of the stack and we digitize more of the stack, more of financial services and other things that are related to financial services get into a super app. Yeah. And so maybe you start with payments because that's what gets you everyday use. But then, of course, investments, lending, merchant acquiring, and then you move outside into insurance, for instance. I don't think anyone really wants an insurance app to open every day, but you do need your bank to open every day. And so then e-commerce, there are other areas where once you've done the KYC of a financial institution and gone through the regulatory hurdles, you have the right mix of financial and personal information to offer a variety of services that go beyond finance.
So I want to give our guests a sort of a bit more of a flavor about who you're currently working with, because both of your companies skew a little younger.
Yeah.
So just remind us what we should know and how that's working out. Pierre.
Yeah, I mean, our average age of customer is 35. And basically, I liken it a bit to telephone lines. An older generation have a fixed line and a mobile. The generation that use Revolut don't have fixed telephone lines. They only have a mobile. And our aim is to make Revolut their main banking partner.
Yeah.
And
so a lot of what Pierre's already set out is a lot, you're singing from a similar sheet there.
yeah, I mean, obviously our businesses are pretty similar to a large extent because
Let me notice the obvious though, Martin. You talk about global, you talk about a young client base. Would lead some people to talk about this great country.
Oh, I mean, if we had to have one license in this area, it would be Saudi.
Yeah.
A young population, a lot of them unbanked, and then a lot of mobility as well. Interestingly, our biggest market globally by market share is Ireland. Ireland, we have a 50% of the entire population market share.
Why do you think?
Well, it's because of that movement between the UK and Ireland and the pound euro.
Yeah.
So basically, a lot of remittance back to Ireland. So, but going back to this region, this is the prize for us all if we can get somewhere here. But there are other great countries in the world you want to have: the Indonesias, the Bangladeshs, the Nigerias. These are 200 million populations, a lot of unbanked. A lot of remittance.
So Pierre, help us build on this because Martin's average age 35 at Revolut. I suspect Ualá skews even younger than that.
Yeah, our average age is 25, 26. I mean, we are in Latin America and very large markets. We're available to around 250 million people, and we have 7 million customers. And the truth is that these are markets where over 50% of people have never had a banking relationship. They've never had a credit history. They've never had investments or insurance. And so you have an opportunity to be not just the best player, but also the first player they've ever had. And that creates a very unique opportunity. There are very few countries in the world that are like that. But a lot of the great margins in fintech come from emerging markets. And so the opportunity in this region is very large as well. But obviously, we focus in LATAM. It's where we were born. And we have 3 banking licenses there to leverage that ability.
Right. So, and on that, we should just explain about the Revolut journey as well. Applied for a banking license out of the UK. You have one in other parts of the world.
Yeah, we've got one in Lithuania, which gives us access to Europe. And most of our customers are in Europe. I mean, we've about 35 million customers globally, of which 7 million are in the UK. So 28 million are outside the UK, which gives us complexities when you're dealing with a UK regulator and asking them to be your lead regulator. So my advice to anyone who's ever applying for a banking license is apply when you're very small. Apply when you're a startup.
It would have been helpful to know that 4 years ago.
Apply when you're a startup. Don't apply when you have 35 million
It's more complex. Okay.
Well, yeah, you're a big business, and most of the licenses that have been handed out in digital banks globally are usually startups. Very few are of a company of our size.
Understood. So you're sort of incumbent in that sense. Okay.
No, but I think also the incumbents have an incentive to delay digital players getting the right licenses. Because, of course, when you can't compete on product, it's easier to compete by trying to argue with a regulator that us or Revolut are going to do something dangerous to the system.
So hang on, Pierre. I don't want to put words in your mouth, but your strong theory here is that the incumbents, the large banks, are actively lobbying against you?
I didn't say actively. I said they're not excited about having new entrants that often offer accounts for free, remittances easier, credit cards more accessible, better ways to try to create credit histories.
As we're applying for a banking license, I strongly disagree with everything you've said.
I got mine. I got mine. So I can
He's
say
sitting
it
pretty. Thank you, Chief Diplomat Gilbert.
Yeah, exactly.
Okay.
Well done.
Well, help us here at FIA get our arms around this, because we want to understand, on the one hand, who are the sectors ripe for disruption? Who are you going for in that sense? But let's be more blunt than that. Who do you see as your competitors? Because we want to understand how you see your own identity. So, Martin, why don't you get us started?
Well, the people we're trying to disrupt are the big banks. And they can never compete against us in terms of speed, product, technology, everything. I mean, really, they find it very, very difficult.
And forgive me, this is well known to this audience, but as bluntly as you can, they've got more money, they've got more people. As a cumulative sum, that must mean more brains. And why can't they do it?
And they've got the customers.
Right. So
And
why don't they do it?
I've been asked to speak at some strategy days of the big banks, and I say, you've got the customers, don't lose them to us. But they can't stop it, really.
What does it boil down to? Why do they struggle so much? We'll get Pierre on this as well.
Because I mean, you take payments payments is where we really go and get the customers to begin with. You know, the average bank still charges 2.5%, 3%. We're charging 0.00 whatever it might be. So, but who are our competitors? Oh, the other neobanks, the other companies like that. So yeah, and they're good. They're very good.
Give your take, Pierre.
No, I just think that it goes back to the stack. It's the difference between having to remake a stack and having to close all these branches and deal with the people, the hordes of people that are part of your structure that don't really want an all digital system because they were promised at the beginning of their career that they would do well by being in the middle management, and having to radically change that to serve 90% cheaper. When you serve 90% cheaper, you can create free accounts, or you can do free remittances like we do in Mexico, second largest corridor of remittances in the world. You can offer free receiving remittances from the United States. The incumbents can't match that without having to restart over, and they don't want to do it. So
we've no branches.
Yeah, exactly. And so
there's no expensive offices.
So I can.
And the experience is different as well, because I don't think anyone under the age of 30, and this goes back to Martin's point about customer service earlier and the generations with landlines, nobody under the age of 35 wants to go into a branch. And so why would they, if they can get a better experience and a better customer service digitally?
So what about the voice that says, there is a certain type of customer that values human relationship, face-to-face connection, a real human to interact with, don't exist anymore?
I am also the guy that still gets the Financial Times on paper every day, but there are less and less of us every day.
We contain multitudes.
Yeah, but even the older, wealthier customer still has a Revolut card. They still have they're not stupid. No. Those that are transferring large sums of money or spending large sums of money abroad, they have Revolut cards.
I wonder if one of our guests at FII is thinking, okay, you keep mentioning the large banks and you talked about the neobanks, but what about these large tech companies? Isn't Google going to sweep in for both of your breakfast and lunch, and there's not a lot you can do about it?
Well, we always wondered that in the asset management industry. Would the Googles or Apples come in? And one thing that puts them off is regulation. So, the downside of everything we do is we are highly regulated. Yeah. I shouldn't say the downside, that's the upside, actually, I should say. But we're regulated.
They're running a mile from that.
They would prefer to be in unregulated businesses.
And they've actually come in. I mean, we offer Apple Pay, we offer Google Wallet. I mean, they are part of the infrastructure, but from there to directly offering financial services, even in the United States, Apple has a partnership with Goldman Sachs. They don't directly offer the high yield savings account. That requires having a banking license, managing that, and being at risk of having the rest of your business be treated as a bank entity. We have no alternative, right? And so I think it's actually easier for a financial services player to go outside financial services because you're already regulated than it is for a very large tech company that has their bread and butter in hardware and in other types of services to get into financial services directly. But they will do partnerships, and they're great partners to have.
Yeah.
So can we just, let's just pull on that regulation thread briefly, because the theory then goes that the thing holding back some of our great innovators could be regulation. Let's have very specific examples of where it's holding you back or where it's actually been helpful. Pierre?
No, I mean, I don't think it's holding us back. Now we have in all of our markets, we have fully licensed banks, and it took us in some cases 20 months, 26 months, and in other cases just 10 months. No. It depends on the regulation, and I'm not going to go over each one because I don't want to pick favorites, but I do think that regulators across the world understand that in 10 years there will be no unbanked people. And so they need innovators, they need new entrants, because the traditional banks never did it, right? So in Mexico, that's my biggest growth market, 70% of people have never had a bank account. That's amazing. Some of the world's best banks and most profitable banks with best margins are in Mexico. But even the regulator understood that you need new entrants to provide that population with a way to pay for services on Spotify and Netflix. Yeah. And so I think that's happening, and I think more and more regulators across the world are actually calling us up and saying, are you thinking about coming to X country?
But it sounds, Pierre, when you talk about it, it sounds like quite core to your entrepreneurial mission is a social mission.
Yes.
Of banking.
100%.
So
Because I think, I mean, I've always said this. I came back to Argentina after 13 years of living in the US to start Ualá. And the key point there was that you can't really ask people to believe in democracy and capitalism and then not give them a bank account, not give them the ability to create a credit history, to have their first credit card. Because otherwise, only the rich get access to great financial services, as it's historically been the case in emerging markets, and the rest of the population has access to nothing. And so giving a free account in a country where most people still pay for opening fees and maintenance fees, which sounds ridiculous in Europe, but it's the reality of every day in Mexico and Argentina and Brazil, you know, that's revolutionary.
Yeah, Martin, we're going to get beaten by the clock, but anything you want to add on that regulation point?
No, I think, look, I agree. Regulators are keen to get fintech companies, neobanks into their system. So there is no resistance to it. I just repeat what I said before, which is apply when you're very small.
Yeah.
Don't apply when you're very big.
So where, just so we get a glimpse of your sort of playbook, where do you see the greatest weaknesses to exploit when you're looking at these huge incumbents? And, you know, we can be friendly but blunt, Martin.
Yeah, I mean, just globally. I mean, wherever. From Australia right through to Mexico, Brazil. We love Mexico, Brazil. We like Australia. We like Singapore. We like Japan. Japan is a huge opportunity. I mean, it's got a very old style banking system.
Yeah.
So those countries, anywhere really, India.
We'll talk globally in a second, but specifically when you're looking at these large banks and you say, look, we can beat them, and
you beat them at a local level, basically.
Bluntly, investments. Most of these banks don't give people the risk-free rate. Like in Mexico, rates are 11.25. Most banks pay people 0. Unless you're a millionaire. In Brazil, the rates are 13%, and the banks pay most people 0. In Argentina, it's even higher, and the banks give people 0. So our best way to attract users is to give them the risk-free rate.
Right.
It's not magic, and then we can lend.
It's part of that democratization mission, opening up things that would have been for the few. I mean,
and the high-yield savings account in a time of high global rates is a game changer because it brings all these people. Some of them are very wealthy, and they're like, why isn't my traditional bank offering me just a risk-free rate? I'm not asking you to a premium.
So, Martin, I wonder if you'd agree with this. In the last couple of years, we've seen relatively fewer new players on the scene. Help make some predictions for us about who will rise over this next 5 years.
Well, obviously, Revolut. We've only got to be 31 times more valuable than we are today to get to $1 trillion. So
it is within reach. But we haven't talked about, I mean, the graveyard of many pop bands and rock bands, to say the least, the United States. Give us your short answer on that, both of you.
I disagree slightly with Nick on this. He thinks US is a great market. I'm always wary of the US. I think they've an ability to keep foreign players out that other countries
I would tend to agree with you. I mean, we are already in the US by virtue of remittances, but I wouldn't go in there directly ourselves. I think it's better to play with partnerships and actually connect the accounts, because obviously international payments is becoming bigger every year for obvious reasons.
I can imagine, Pierpaolo, someone sidling up to you over coffee and saying, don't you have a rising politician in Argentina threatening to dollarize the economy, play havoc with your business plan? What do you say to them?
I mean, it would be great for us if they dollarize. I don't think they will, but if they did, I mean, it would actually be great because we would be able to offer credit much longer duration than we do today with a high inflation rate. So actually, it'd be great for business. I don't think it's going to happen, but for business in Ualá, it would be great. We're already profitable in Argentina, so it'd be great for us.
And what do you say, Martin? And we are now very much unscripted in our final couple of minutes, but
the best part.
But tell me, when your colleagues and friends here at FII sidle up to you from the incumbents, from these big banks, saying, let's work better together, let's be friends, are you still the barbarians at the gate? Are you... Is there harmony to be made between you?
I remember one of them saying to me, when I said we'd 30, or as we were then, 10 million customers, he said, users, not customers. So that's what they think of us. They don't really still take us.
Underestimating.
Yeah, I
think
think
that's the best thing.
Yeah,
to be underestimated by your competitors is...
Because we're not hurting them too much at the moment, but it will eventually.
Now, in our final 30 seconds, I wouldn't be being mischievous if I didn't say, aren't you going to bump into each other, you two, at some point on the competitive field?
Yeah, no,
Sure.
we'd love to. We should merge.
I think. Look, financial services is a place where not even in the largest countries in the world is there a monopoly. It's not possible. There are no natural monopolies as there would be in search and potentially in AI. So no regulator would ever allow, 2 banks in the United States. So you need a few others. You need competition, and actually competition elevates the playing field, and everyone gets better. But I do think that in the next 10 years, most of the largest financial institutions will be fully digital.
So
and
so
not
on
the
that,
incumbents.
I've just been shown 1 minute left. So many things against you as companies, but in terms of the secret sauce that you still feel as founder and chairman gives you the advantage, what does that advantage boil down to in a word or two, Martin?
I don't think I don't think everything is against us. In fact, I think everything is for us. Actually, we've got products that wherever I go. I mean, I was speaking to a pilot on the way out here. He said every pilot in the world has Revolut cards.
Yeah.
Ireland, as I said, has 50%. I was speaking to one of the presenters here. She said she has a card.
Yeah. So you're right. You're right to push back on the question.
We've got a terrific opportunity
And I'll say
here.
talent. Like, nobody wants to work for our competitors. They all want to work for us. And
Right.
I think that tells you where people want to build product. And those are the new generations to build the next stack, which will be better than the next. And so as we go into beyond financial services, because you already have the customer, it's not a user, it's a customer.
Yes.
And you can serve them in other ways that go beyond that.
Well, we almost got a merger scoop out of the two of you, but not today, but we certainly got a talent advertisement as well. Pierpaolo Barbieri and Martin Gilbert from Ualá and Revolut. Thank you very much indeed. Thank you.
Well done.
Thank you so much.
If you're sticking around this stage, I'm going to have a brief conversation with Sophia, our robot guest, momentarily, but
interesting
thank
than
you. No, thank you.